I don't want to hold gold into that environment. I actually think it's a very bad environment to hold gold. And especially because gold is 50% is above its top from 2011, where the rest of the pack is like 30, 40, 50% below that, even gold miners. So why is it so controversial to say, I think maybe at this point here, gold is not so good an asset to hold. So no, I don't think gold is the right thing to hold at this point. Will gold be the right thing to hold when we see this whole thing passing? Absolutely. But that will be from quite different levels as I see it.
Global gold prices soared last week, achieving their best weekly performance in 20 months. This surge was fueled by heightened demand for safe haven assets amid escalating tensions between Russia and Ukraine, even as the US dollar strengthened. As the week concluded, demand for gold surged as investors sought refuge ahead of the weekend, anticipating potential new developments in the conflict. Henrik Zeberg, a renowned macroeconomist and founder of the Zeberg Report, has warned about an imminent market crash. Known for his accurate predictions, Zeberg believes that a significant market downturn is on the horizon. Surprisingly, he cautions that traditionally viewed as a safe haven asset, gold may not provide the protection investors expect during this crisis. Despite the dollar reaching its highest level in 2 years, marking its third consecutive week of gains against a basket of major currencies, gold continued its upward momentum. Market uncertainty regarding potential policies under Donald Trump's administration, which could significantly impact the U.S. economy and interest rates, also contributed to the demand for gold. Furthermore, U.S. government bond yields hovered near 6-month highs, a factor that typically exerts downward pressure on gold prices. However, the metal's resilience highlights its enduring appeal as a hedge against geopolitical and economic uncertainty. Zeberg's bearish outlook on gold stems from his expectation of a deflationary bust. As the economy contracts and inflation subsides, he anticipates a sharp rally in the U.S. dollar, driven by heightened demand for liquidity to service and restructure debt. Zeberg argues that gold's appeal as a store of value diminishes in such an environment, making it a less favorable investment in the near term. Zeberg questions the disconnect, asking why gold has risen while everything around it, including related assets, has fallen. Let's delve into the video to gain further insights. Before we begin, consider subscribing to the channel and hitting the bell icon to stay updated with the latest content.
I think it's interesting to see how people have been talking gold up, and the gold has been moving up quite strongly, but it's still up, let's say, 1.6 times from the bottom we saw back in, was it 2014 or something around there, 15 maybe it was, yeah. And that's 160%. Great, amazing, fantastic. But if you look at it in the big perspective of things, and you look at also across with other assets, all other precious metals, you'll see that gold actually has outperformed silver. So if you look at from silver from 2011, it's down like 50, 40%, I think. If you look at platinum, somewhat the same, 43%. If you look at the gold miners, I think it's 48 for platinum. If you look at the miners, they're down 43%. So why is it gold is up and everything around gold is down? Why is it that we see that discrepancy? Why do we see that disconnect? And then people will start to say, because that's the feeling within themselves, the sentiment, say, oh, it's because gold leads. I think that's wrong. I think it's because gold has been talked up to becoming that, that's the safe haven, and actually more or less now is in a kind of a smaller bubble by itself now, because it's been spoken up so much. Everybody needs to hold gold because that's a safe thing when the debt explodes and when we have all these bad things going around. The problem is that we just haven't seen that, supported by everything else. And I've been of the idea all the time that what you see here in terms of the all-time highs on gold is actually what I see still as correction. I know that sounds wrong, difficult to understand, at least when you see gold going to new highs. But I actually think you're going to see a rather strong decline in gold to the very reasons that I just talked about here. I think you're going to see that first reason. When you see a deflationary bust, you have the greatest bubble in the world in all asset classes. If you look across the markets, and if you look at that and you say, okay, when you're going to see a deflationary development, what will then be needed? Dollar will be needed, US dollars, because there will be a lot of debt that will be implode. There will be a lot of restructuring and so on. And that is where the dollar will be needed. The dollar is going to go to 120 on the Dixie, as I just said. I don't want to hold gold into that environment. I actually think it's a very bad environment to hold gold. And especially because gold is 50% above its top from 2011, where the rest of the pack is like 30, 40, 50% below that, even gold miners. So why is it so controversial to say, I think maybe at this point here, gold is not so good an asset to hold? I know I've said it earlier as well. I stick to that. And it has been developing into what I will say an abnormality to compare to what you see with the other precious metals. So I think the day of reckoning will come to gold for a short time, for the time where you see the deflationary bust. In 2008, we saw it for 6 months. We saw gold declining by 34%. We saw silver declining by 60%. I'm just saying, into a deflationary environment, I will not be holding gold. And I think that is actually what the rest of the precious metal assets are actually telling us is maybe gold has been front running it a little too much, and maybe that is going to come to a reckoning after we're going to see when the dollar starts to rally into a deflationary bust, if I get that right. So no, I don't think gold is the right thing to hold at this point. Will gold be the right thing to hold when we see this whole thing passing? Absolutely. But that will be from quite different levels as I see it.
There has been widespread optimism about a soft landing for the global economy following the sharpest inflation surge and most aggressive monetary tightening in decades. Recent data from the U.S. economy appears to support this outlook. Despite October's modest payroll gains, the labor market remains robust, with jobless claims below expectations and unemployment steady at a historically low 4.1%. Market sentiment reflects cautious optimism, with a 60% probability that the Federal Reserve will cut interest rates by 25 basis points at its December meeting and a 40% chance of rates remaining unchanged. However, Henrik Zeberg offers a starkly contrasting perspective. He warns that the global economy is teetering on the brink of severe disruption, dismissing the soft landing narrative as unfounded. He advises patience for investors, arguing that the current environment is not conducive to gold and commodities despite their promising long-term outlook. According to Zeberg, the Federal Reserve's eventual policy pivot will be the crucial turning point, likely setting the stage for a highly favorable environment for these assets in the future. Now, let's redirect our attention to a video.
Look at the economy at this point. I mean, if you have a lot of talk about a soft landing, which there's no evidence for whatsoever. Soft landing would mean that the consumers were now feeling better. They do not. If you look at delinquencies and so on, and credit card delinquencies, you'll just see that is skyrocketing. There's no evidence that the consumer is feeling better. So the economy is rolling over. How long will that continue? Well, it will continue into 25, a good distance into 25. But at some point, the Fed is obviously going to come out, especially if you see the bust that I'm talking about. The Fed is going to come out with their guns blazing. And I think probably that could be the point where you'll see that due to what they set in motion here with their stimulus and whatever, I think they can set in motion a stagflationary kind of environment. So we will see a deflation first, and then a stagflationary environment developing, which means that you will see unemployment staying stubbornly high, and you will see inflation starting to move up again. And I think the point in time will be when, like we in 2008, we saw the Fed coming out and announcing these big stimulus packages. And that was in September after Lehman Brothers, when we had the Black Swan events and all that. Well, then they come out and then they are afraid that things can just keep collapsing. When they do that, I think that is a good time. That is probably when I'll say, okay, now the environment will shift. But you'll probably be in a moment there where everybody will be talking about saying, okay, gold lost its mojo, it's not never going to come up again, and things like that. And oil is going to stay low, or whatever they will say. Oil is just an old-fashioned kind of energy source, whatever. All these things is what people need to say. Well, okay, when we start to hear that, that's the kind of chit chat we want in the street, because then probably you get some good deals. But when everybody is talking about, oh, you need to buy gold, probably is not the best time. So wait for that. Wait for what's going to come, because obviously the Fed will come out, and what they can set in motion the next time here with what they're going to do, I think is going to be a very beneficial environment for gold and for commodities. I think the commodities cycle is going to be absolutely fantastic going into late 25 and early 26 and even on beyond that. So it's about waiting it out and not just jumping into it because it sounds like a good idea. Because inflation has been high some months ago, it doesn't mean that inflation is going to be high for the next coming months. And actually, it suggests with the chart that you look at oil that you can see a rather strong decline in oil, which means inflation is going to come down, and that's not good for commodities. I mean, I don't want to be in emerging markets when you'll see the Dixie is going to move up with to 120. If I get that right, into 25. That is going to be a terrible place. I don't think China or anyone else there is going to have a fun time either. I think we're starting to see the deflation of development there, actually, because they have a big problem in their whole real estate sector. I don't think that Japan looks great at this point here. I think we have had the perfect crisis becoming, because you can actually have a point where it's unable to stimulate even further, because I mean it's you have the perfect valuation with when the interest rates have been so low for so many years. I mean, there's very few places where you want to be when this is the situation, and that's also why I would say that the only solution to this will be the Fed coming out and deliberately trying to crash the dollar from 120, 122 or something like that, and put a pressure on that. And at that point, I'm going to be the biggest gold buyer. I'm going to be the biggest buyer of gold miners and silver and so on. But that's a different situation than we are in right now.
The global economic outlook remains a subject of considerable debate, with differing views on whether we are headed for a soft landing or a more significant economic downturn. The potential for an interest rate cut by the Federal Reserve suggests a more cautious stance on inflation and growth, which could provide short-term stability to the markets. However, concerns about the long-term economic path persist. Rising credit card delinquencies indicate that consumer confidence may be weakening, signaling the possibility of a deeper, deflationary contraction. Historically, deflation tends to be unfavorable for gold. This raises the important question: is now the right time to invest in gold? We value your thoughts, so please share them in the comments. If you found this content valuable, please give it a thumbs up and remember to subscribe to stay informed. Thank you for being part of this journey with us.